Hi, this is Ian Coleman from PIA-First. Today is Sunday the 8th of July 2015. This is this week's video analysis for the FX majors and the dollar index. We've seen a turn in the dollar. We sort of came up short of where we believed we would get to. We were looking for a rejection of this area here, which is the trend of lower highs, and the 50% pullback level at 96, the figure. If we break down to shorter time frames, or a different view I should say, the weekly chart highlights levels close to the previous swing high, and the 261.8% extension at 95.27 being sold into. Previous week we posted a bearish outside week, which normally highlights the top of a trend and a new move to the downside. If we go to the daily chart here, we can see a bullish Elliott wave count. To the downside, we've got support at 93.80 and at 92.74. They're the two Fibonacci pullback levels. Our bespoke support is located at 93.40 and at 93.10. If we go to an intraday chart, there is scope for mild buying at the beginning of the week as we approach this 161.8% extension level, but we expect to hold within this bearish channel formation, and we look for rallies to be sold into down to these aforementioned support levels at 93.40 and 93.10. So reflecting that back onto the FX majors, and we're going to start with euro dollar. We had an exhaustion count on D-marks, a 13 count that normally highlights at the end of a trend. We've held within the Ishimoku cloud. Daily trading has been pretty mixed and volatile. If we go to another view, we do believe we're going to form a bearish head and shoulders pattern. So this will be the left shoulder, this will be the head, and this will be the right shoulder. Trendline support around about 120.20 at the moment. If we go to the daily chart, again we can see a Fibonacci extension level, levels close to it being bought into, bullish outside day posted from the low, bullish divergence posted on the RSI, and then we've moved to the upside. We have seen some stalling in price action close to the 23.6% pullback level at 117.55. However, we look for dips to be bought into. We're looking for a move further to the upside. 118.15 is our first resistance, but this is the favoured level here, which is 118.92, close to the 38.2% pullback level. So this basically being a confluence area as far as we're concerned. To the downside, bespoke support is located at 117.18 at the beginning of the week. Cable or sterling dollar broke a channel formation to the downside. Levels close to the 50% pullback at 131.32 have been bought into. Reverse trendline resistance comes in around about 139.44. If we go to the daily chart, we can see we've broken a wedge formation to the upside. There has been some stalling in price action close to these previous levels of resistance. However, the measured move target for this breakout is 134.40. We've got our bespoke support, resistance at 134.38. So we're looking for an upside rally to continue really. 132.51 is bespoke support at the beginning of the week. A break there, 132.13 is pretty solid support to the downside. Dollar Swiss in a large wedge formation has an eventual bias to break to the downside. Levels close to previous resistance that was posted from October and November of last year have been sold into. Not much in the way of an aggressive sell-off yet. We do believe this move lower is corrective, going to be mixed and volatile. The Marabuzo level from April is located around about around about 97, the figure. If we go to the weekly chart, here we can see we posted a doji style candle from the high. Been pretty mixed and volatile trading. That's often common in corrective formations, but the most important time frame, I suppose, is this one, the daily chart. 261.8% extension at 99.80, levels above there got sold into. We've got an evening doji star formation here from this free candle pattern. An ABCD formation looks to target 97.25. 38.2% pullback level is at 97.23, and our bespoke support is at 97.50. So basically this is the target zone for us going into this week. And remember, we've got that Marabuzo level from April just below that support zone. Dollar yen, I think the most important time frame is the daily. Here again, a bullish Elliott wave count, levels close to the 261.8% extension at 110.87 being sold into. A full AB equals CD formation from current levels just takes us below this 50% pullback at 107.99, and that's our target zone for this week. 109.94 is trendline support. If we break down into a shorter time frame, this is the hourly chart. Again, we see a 5-wave pattern to the downside, a corrective formation higher. We have tested the breakout, or retested the breakout level once at 110.55. If we see a move to the upside in early trading at the beginning of the week, we've got bespoke resistance at 110.56. So again, we're looking for dollar rallies to be limited. Dollar CAD, let's break down all the time frames here. Ending wedge formation, broken to the upside. However, rallies have been sold into. Reverse trendline support comes in around about 130 the figure. If we go to this view, which is the weekly view, we can see that levels close to the 50% pullback of 133.75 were sold into. We've got a bearish outside week posted. We've got rallies from last week being sold into. There's no clear indication that the sell-off is coming to an end. If we go to the daily chart, here we can see a bearish outside day, quite an impulsive move to the downside. Like I said, 130 is really quite a good congestion zone for dollar CAD. To the upside, 131.28 is our bespoke resistance at the beginning of the week. Aussie dollar, levels close, a wedge breakout, which normally means that we have a prolonged period of selling. However, levels close to the 50% pullback level at 73.27 have been bought into. We've got pincer bottoms on the weekly chart. Reverse trendline resistance comes in at around about 77 the figure. If we go to this time frame, here we can see quite an impulsive move to the downside. We've broken the wedge formation to the upside. This was the measured move target, which is at 74.44. Levels close to that were sold into on Friday. I think the scope for more selling, corrective selling in Aussie dollar at the beginning of the week. 74 the figure is our first bespoke support, and then we've just highlighted these retracement levels coming in at 75 the figure and 75.37, which we think is quite significant. If we go down to the 1 hour chart, we look like we've made a reverse bullish head and shoulders pattern. So left shoulder, head, right shoulder. Neckline is being rejected. Like we said, 74.08 is bespoke support at the beginning of the week. 75.07 and then 75.53 is bespoke resistance, and that is basically the measured move target also for Aussie dollar. A euro sterling now really been struggling with this cross. Monthly chart probably highlights why. We've got 3, 4, 5, 6, 7, 8, 9 months where we've really seen little net change in this cross. If we go to the daily chart, here again we've got sort of reverse views. We've got 58 days of mixed and volatile trading, possibly formed an ending wedge pattern. Would need to see a break of 87.54 for that to be confirmed. To the downside, support this week is 88.12 and 87.88, bespoke support. To the upside, we've got trendline resistance at 89, the figure. We are bearish over the long term, but we're just not sure about short-term price action. Trendline resistance from this chart actually comes in at 89.26, so we're going to look at selling into rallies, or we're going to look for confirmation of a wedge breakout with a break of that trendline support. Euro yen in a very large expanding wedge pattern. This pattern has an eventual bias to break to the downside. Trendline support at the moment is at 123.10. We've got a congestion zone up here, which is 132 to 134. If we go to the daily chart, impulsive move to the downside. We're just trying to break out of this channel formation. An AB equals CD corrective formation takes the pair to 132.35. We've got 61.8% extension level at 132.58. We've got support at 129.81 going in. Sorry, we've got resistance at 129.81 going into this week. So we really need to break that level to move higher. Quite interesting here is that we've got the 61.8% pullback at 132.58. If we go to a shorter time frame, and this is the 4-hour chart, we've got a 261.8% extension level at 132.39. So we've got that confluence area up here for that AB CD formation to possibly complete. Like I said, 130.20 is a 161.8% extension level. Rallies are probably going to be limited at the beginning of the week, especially with this being a previous congestion zone. So we're looking to buy into dips for another move higher towards 132.40. Okay, I hope you've enjoyed the video analysis for this week, and I'll speak to you again next Sunday.